Okay, what's going on, everyone? Sponsor Zamini here, back here again with another video. Today, I want to talk about a very interesting topic that a couple of people just tend to overlook and miss when it comes to picking and selecting stocks or companies. So I just want to talk about market cap, what is market cap itself, and the difference between small caps companies, the mid cap companies, and as well as the large cap companies as well. So let's jump right on it. So by definition, right, market capitalization, commonly called market cap, is the market value of a publicly traded company, of a publicly traded company's outstanding shares, right? So the market capitalization is equal to the shares of the is equal to the share price multiplied by the number of outstanding shares. So basically, what we are talking about when we are talking about market cap, we are talking about the total number of outstanding shares, right, multiplied by the share price at that particular time. That gives us the market value of that certain company. So I hope this makes sense. What is a market cap? This is just a basic calculation, right? So by far, so far, the largest companies here in the world, the largest company by market value is Apple, right, which is listed in the United States, and the second largest company by far in the world is Saudi Aramco, which is the largest oil and gas company in the world, followed by Microsoft, then Amazon, Google, and then Bitcoin also falls on this it also falls on this list because it has recently reached a trillion market value, and then followed by Tencent, Tesla, Facebook, and then Chinese Alibaba. So these are just the largest corporations, right? Largest companies in the world. As much as Bitcoin is not a company itself, but it's still on this list because it has reached a $1 trillion milestone. So by moving forward, when we are talking about market value itself, by asset class. So Bitcoin as an asset class, Bitcoin value is close to 1.66 trillion US dollars by value. And then the gold market itself, the spot gold market itself, is close to 8 trillion US dollars. And then the global stock markets collectively combined, they are close to 73 trillion US dollars. And then the global money supply is close to 90 trillion US dollars. And then the global real estate, is close to 228 trillion US dollars. So it's the collective global real estate market cap globally, all in the world, that is this 228 trillion US dollars. And then the global bond markets. So when you're saying debt, you are saying almost it's the global bond market, of which is 246 trillion US dollars. So moving forward, so when we are talking about small caps, mid caps, and large caps companies, so by definition we are talking about companies. Let's say we are talking about a micro cap company, right? We are talking about a company that has a 0 to 300 million market capitalization, right? This is a micro cap company. And then a company that has 300 to 2 billion market value, that is a small cap company. And then a mid cap company is from 2 billion to 10 billion in value, that is a mid-cap company. Then a large corporation, its value starts from like 10 billion up to 200 billion. So those are large corporations. And then the mega corporations, and the big ones, the mega corporations in the world, they start from like 2 billion up to trillions of dollars, or in rand value, depending on the denomination of the company that it takes its revenue on. But it's the concept, it's almost the same almost everywhere. So which ones should we invest in? Small caps, mid caps, or large caps company? So in my own understanding, a company can be small, it can be small, but when it's small, it is volatile. So a small company, when it's small and volatile, it creates a lot of risk. But a company can be small as well and then be popular, but it lacks liquidity, right? And then a company itself can be large, but it is not popular. So when it's not popular, it is not volatile, and as well it lacks liquidity. So these things, they go hand in hand. So I'm just gonna make a simple an example by this company here, Saudi Aramco. Saudi Aramco. So as we saw there on the list, that Saudi Aramco, here on the list, Saudi Aramco, right, is the second largest corporation in the world, right? Is the second largest corporation in the world, and the biggest oil company in the world. So it falls on the mega cap companies, right? The large cap companies, the big stock companies. But its problem is that it is not popular in the investment world. And then, so when it's not popular in the investment world, it lacks like liquidity, right? So you can invest in Saudi Aramco, but it is not popular, and then it lacks liquidity. As much as it has like a 1.7 trillion market value, but it lacks liquidity, and it is not popular. Why this company is not popular? Because number one, its large holding, its large ownership, and also 98%, it is owned by the Saudi government. As you can see here, it is owned by the Saudi government, right? And then even like Vanguard, BlackRock, even UPS, they own less than 1% of this company. So these large players, these large investment bank players, BlackRock, Vanguard, they cannot sell this company to their clients, because most of its stock is owned by the Saudi government. So as well, why it is not popular? Because of the region where it is located in the Middle East. You know what is going on in the Middle East. Because of their religion, outside investors cannot buy this company, or outside investors cannot have access on this company. And also the tension in the Middle East, with the Western world. So Western companies, Western investors cannot easily access or buy shares of this company because of like their religion, and also the tension in the Middle East, plus the huge ownership of the Saudi government, As much as it is a huge, large company, but it lacks liquidity, and it is not much popular or liked in the investment world. So let us make another example. The one that we're talking about, it was a large company. Let us make another example. Our PPE, the People Group. So People Group, it's a small cap company, right? Small company listed here in South Africa, in Johannesburg, but it has been recently being popular here in the investment world, right? And then, so by it being popular, it has like liquidity, right? It has liquidity because more people are gaining interest in it by investing in it and buying in its shares and buying its stock, ne? And this company, as much as it is small, popular, liquid, it is not volatile. This company doesn't move 19, 20, or 30% a single day. It moves like a modest 5%, 8%, of which is just a modest movement for a small company in an investment world. It has a small market value of 1.9 billion, of which is fabulous. 1.9 billion. So this company still has room for growth to go even higher, to grow even more. So it is popular, it is liquid, and what's most interesting about it, it is not volatile. So out between the Saudi Aramco and this one, I'll definitely personally choose to invest on the People Group than the large one, Saudi Aramco. So making another example now, we made an example of a large cap, ne? And then we made an example of a small cap company. And then now looking at a mid cap company, this one of which it is Telecom. Everybody knows Telecom. It is listed here in South Africa. A mid cap company with a market value of 21 billion rand, which is popular in the investment world, even popular to citizens in South Africa. It is very, very liquid because many investors own the stock itself, and then it is not volatile as well. So Telecom as well, it's not volatile. It's a mid-cap company that is growing, and it's a standard rate and it's a standard pace, and it still has room to grow even more further to be a large company. So I'll definitely personally invest in a mid-cap company like Telecom, which has a modest valuation and also ticks these three boxes as well. So looking at another company, which is Naspers, right? Everybody knows Naspers, the largest media group in Africa. It owns Process, and then it owns which one? It owns this company here that we spoke about. It owns Tencent. So everybody knows Naspers is quite popular here in South Africa. It owns as well. It owns as MultiChoice. So this company itself, oh, I forgot to write here. It's Naspers. Yeah, sorry about that. So Naspers here is a mega cap company, is a large company here in South Africa, also popular in the investment world, and it is very, very liquid, and also it is very, very volatile and has a huge market value of 1.5 trillion rand. So between this large cap one, Naspers, and the first one we spoke about, the Saudi Aramco, I'll definitely choose this one, Naspers. Why? Because it is popular, and then it is liquid, and then as well it is volatile, and it also owns other assets that are also popular and also volatile. So this company still has more room for growth, even though it is still a large company. So it still has more room for itself to even grow. So I just wanna outline a few things here, or based on this presentation here. So just a few pointers here, So diversification across all sectors is the best hedge against bad luck. So this statement entitling that diversification across all sectors of the market, it helps you to be safer against when market starts to fall. Maybe when the market starts to rotate to a certain cycle, maybe you will be safe when you're diversified on your portfolio, right? So one of at least discussed features of global markets over the past year. So over the past year, there's small cap companies have outperformed the large caps companies. So much attention has been placed on the performance of the mega cap growth stocks, of which we know are those Apple, those Amazons. That has almost gone unnoticed that small cap companies has universally fared better than large caps companies since the pandemic started. So this here, right here, is the graph of the blue one is the S&P 500, right? And then the orange one is the Russell 2000. So the S&P 500 has been growing strong, and as much as why it has been growing strong, because the large cap companies rebounded very fast. But look at what the Russell 2000 did as well. It didn't lag very much on the S&P. It relatively leaned toward the growth of the large companies, and then surpassed the growth of the S&P towards the year end last year. And then you can see like small companies are growing at a rapid pace and outperforming the large cap companies. So do not be surprised if you don't immediately know the name of the company of every small or mid cap stock you read about, because some of these companies have been there for some time, but they haven't been popular on the investment world. Some of them, they just came out now because like people just came to notice them recently, because they just recently been popular on the investment world. So some mid-cap stocks are household names that we know about, ne? So some of them we know about these companies, but we haven't taken notice of them because they haven't been much popular on the investment world. So especially companies they specialize on a certain niche of an industry. So I can make an example like Trelitor. Trelitor is a company that we know, we see on TV, their advertisements, but we haven't much take a look on them when it comes to the investment world. So small caps, mid caps, which one is the right mix for you? So building a diversified portfolio means investing in a mix of large, stable corporations and smaller companies with growth. So it's important for you to mix large corporations and then small corporations with potential for growth. As we made an example here that you can own you can own Naspers, ne, as a large corporation, ne? You can own Naspers as a large corporation because this is popular, liquid, and volatile. And then you can also own companies like Telecom, which are as well popular, liquid, and not and least volatile, and they have a potential for growth in the markets. You see, so it's just a mix of companies here. And then as well, you can own this small company, the People Group, the People Group, which has a small market value, and this small market value has a possibility to double or quadruple in value over time, maybe over 3 years or maybe over a space of 1.5 year. So it's important to mix your portfolio. It's important to mix your strategy with large corporations as well as small corporations. So investing in small caps companies is an important element of an investment strategy. I've just explained this. Small companies tend to have a greater chance small companies, sorry, tend to have a greater chance than to grow faster than large companies. For instance, a company with a market value of 500 million is more likely to double in value than a company that has a market value of 300 billion. A 300 billion market value company can double, but a company that has a 500 million market value has a higher chance to double in value than a company with a 500 million market valuation. So smaller companies also don't have as much analysis coverage as large corporations, right? This leaves room for smaller companies to go unnoticed. So a company can grow and double in value without anyone noticing it. Ne? If you are putting time into research, you can find smaller companies that are very, very profitable than even large companies. And then lastly, small companies have the ability to outperform large companies. This doesn't come it doesn't come without a risk, of course. Exactly, there is risk when it comes to this, but small companies tend to outperform their counter large companies. So just to do a brief example of how you should mix your portfolio. Perhaps when you try to allocate your portfolio, 30% you can buy large companies, né? Of your portfolio. 30% of your portfolio you can own large corporations, and then 20% you own mid cap corporations like Telecom there, and then 20% you own smaller companies as well, and then 20% you can diversify, try to buy companies from outside of South Africa or offshore companies, depending which part of the world you are staying in. And then 10% you can buy bonds, or 10% you can stay as cash in your account, in your account, just to maybe when something goes south on this, that 10% can also handle the loss on your account. So by making an example of this list here, so the large caps you can buy Process, you can buy Richmond, which are the large companies, right? And then mid cap you can buy Exaro, and then you can buy Sanlam, and then you can buy Telecom as well, which is a mid cap. And then from small caps, you can buy Jasco Limited. I'm sure you've never heard of this company, Jasco Limited. And then you can buy Trelito. Trelito, it's a company that we know, but we haven't much heard of it from an investment perspective. But it is there, it is listed on the JSE. And then on the international side, perhaps you can buy maybe an ETF, an MSCI, UEFA Growth, or also buy some mutual fund Melility Series International Growth. These are ETFs, ne? And then you can buy bond as well. The iShare Core US Aggregate Bond, and maybe another mutual fund, the Fidelity Total Bond Index, which tracks all the bonds in the world. So in conclusion, guys, it's important to know the difference between an ETF and a mutual fund, right? Also understand the market capitalization. Also understanding market capitalization is crucial before choosing your own investment strategy. You also want to make sure you are comfortable with your asset allocation, so you are not heavily weighted in one asset class. So this will improve and help you keep a well balanced and diversified portfolio over time. So guys, I hope this video will be educational like the others. I will also try to improve on my skills, on my talking skills, and I hope you guys are going to enjoy this video, and it's going to be educational, and I hope you like it. And you can follow me on TradingView at Small Dlamini. Then on Facebook it's Interpret Asset Management. On Twitter, the business handle is Interpret Asset M, and then my personal handle as well is small_la_mini. So guys, remember, trading CFD and leverage products involves a significant level of risk and loss. Please trade money you can afford to lose. Do not trade money that you cannot afford to lose. That will change your lifestyle. Money that you are not needing in the near future. You cannot trade money or invest money that you have to pay rent at the end of the month. So that is not trading. That is strictly gambling. So guys, thank you for this session. I will definitely see you on the next video. So thank you and goodbye.